Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is our good friend, Andrew Maguire. Andrew, it's great to see you again.
Yeah, it's great to be with you guys. As I say, you guys are just knocking it out of the park with this channel. It's taken very seriously now. This has come a long, long way in the last year.
Well, hey, Andrew, one of the things that you've been talking about, I thought on the Inside the Vault, or I think the series you do, is imports into India and Turkey. So you sent me this that I'm going to share now. And this is some data that you've gathered from some sources you have. Tell us what you're seeing here from Indian silver imports.
Yeah, okay. Well, it's that chart kind of says it all. Basically, what's happened is that there's a sudden increase. And I think this is part of the story about the imbalance between what the paper market is telling us and what the physical market is telling us. And now, so in the month of September, when silver seems to be doing nothing, what's happened there? You can see that in India has, after 13 months of really doing nothing, suddenly in 1 month of September, picked up well over 500 tons of silver, physical silver.
This was almost 20 million ounces, it looks like, that they imported. So let's just I'll do the math right here. What is it, 32,000 ounces in a metric ton or something like that? So like over 600, we're not sure, it's not clear from the graph, but over 600 metric tons probably, right?
Wow. Well in excess of 500, and yeah. Keeping it in round numbers, and then and
what's 100 metric tons among friends, right?
Exactly. What's 100 tons between friends? And I think it's important to see this kind of data, because really everyone's been moaning and groaning about the silver market. And what's the silver market? It's been doing nothing. It's been capped. Hey, this is not a capped market. This is a strong physical market coming right off the back of Turkey in October as well. I mean, Turkey, making no coincidence that Turkey follows this buying in October.
Yeah, so that's kind of interesting, and that's really what it takes to break the paper game going on in London and at the COMEX, or the CONEX, or the CRIMEX, as some people call it, is when countries start taking hundreds of tons out of physical. This is physical coming off the market. That just sort of blows up the paper game. I mean, 20 million ounces from India in 1 month. That's almost the annual production of First Majestic. I think First Majestic mines 24 million ounces a year, something like that. I mean, India just bought all of First Majestic's production for a year in 1 month, now that they're back in the market. And you said the number from Turkey was even larger? What was that, roughly?
Well, by the third week in October, we had absolute accurate data of 346 tons of physical imports. Then by the end of October, I think we've done a little bit of a guesstimate, probably rose to well over 400 tons, but it could even be 450, but I'm just round numbers. Between India and Turkey, 1,000 tons of physical physical silver has left this market.
So, Andrew, there was also something that you noticed from the wholesale market that Standard Chartered is doing. They've been buying a lot. What can you share with our audience about that?
Yeah, and that's another thing that we've just reported from Live from the Vault, which is just literally, which I reported last week. Now, this happened last week. Now, this is really interesting, because I think if ever anyone wanted an example, an absolute example of how dislocated this paper market is from the physical market, we have absolute certainty, because Standard Chartered, a COMEX market-making bank, along with obviously representing what the other guys are doing, but this particular bank was in at our refineries, every single large refinery that we deal with. They were there and they were buying up forward supply, not just for the rest of this year, but deep into 2022. Wow. Now, this is huge, but the thing is, what I'd like to draw attention to is when this happened, and we saw it happening live last Tuesday, and if you don't look at the silver chart from last Tuesday and Wednesday, you will see two enormous declines at the exact same hours that Standard Chartered was buying physical silver.
Why would there be a decline in the price while a huge bank like Standard Chartered is buying?
And this is why it's so important to explain this, because if you just had the myopic view of the one side of the market, which is the COMEX market, what you're seeing is Standard Chartered and other COMEX banks who are buying physical and buying forwards into the future, hedging that transaction on the COMEX. But when you are blinkered to what is happening in this smoke and mirrors world of the over-the-counter markets, where that long is supposed to offset the short hedge, all you're seeing is the shorts coming in and tanking the market. And the speculators, all they see, have no visibility into the physical market, see these sellers coming in, it is pure hedges. And this is how the game perpetuates, is because these over-the-counter longs, which are not evidenced until they're actually crystallized, are just part of a 10,000 ton a day wow. settlement, paper settlement that happens in London at the end of each day. About 10,000 tons, 10,000 tons of paper silver over-the-counter contracts get squared amongst the bullion banks. What isn't known is that is the only way you can get away with exceeding position limits on the COMEX, because what they're doing is signing off that there is a long and it's hedged. So all of these shorts they're claiming are hedged, but they're hedged with an over-the-counter contract, which isn't even crystallized. Out of this 10,000 tons a day, only some of it gets crystallized. So you've got this ridiculous game, but silver gives the clue away.
And so, Andrew, this everything that you're reporting for what's going on in the physical market, how does that affect? I've heard you say in the past that this has an impact and makes the commitment of traders, the COT report, look confusing. Can you explain that to our audience?
And when you think about it, is that it's COMEX is a reportable exchange. Now, it's actually Basel III compliant, believe it or not. But what happens is, on the other side of these transactions that you look, so you look at all the shorts that are coming on this, it's a swap deal of shorts. I mean, the different categories, you look at that short interest, what is not realized is that for them to enable them to take those size of positions, it has to be hedged. And so we just talked about what Standard Chartered is doing. Exactly that is, there's a over-the-counter long position to offset these positions. So what is the point of really looking at? It does give us an idea as to what the footprints are, but actually you can't take this at face value, because on the other side of this trade, you can bet your life, and especially in silver, there's not a single market maker that wants to sell you any of their silver, and they're definitely hedged in the over-the-counter markets. Now, right now, into Basel III, obviously, the London market is not yet compliant. The rest of the world is compliant, including the COMEX. So how do you get away with it? You say, well, I'm hedged on the over-the-counter market. Well, that can be a paper position. It can be 100 to 1 paper position hedging this COMEX compliant position. So really what I'm saying is, don't take it at face value. The net short positions you're looking at there are not to be taken, as I say, they're not to be taken at face value, because they are hedged in the over-the-counter markets. It's as simple as that.
Andrew, we know that Kinesis pays you a yield for holding gold and silver, and we heard about the recent payout. Can you give us an indication on how much Kinesis has actually been distributing?
Yeah, great. And this follows off on, you had Tom Coughlin, our CEO, on recently, running you through this Kinesis monetary system. And obviously where participants share in these fee pools. And so really, yes, let's look at it. The holders yield payout. And that was $2.8 million worth of gold and silver, which is basically a debt-free passive yield paid out to all the users you just stacking gold, literally silver, and choosing to store it on the Kinesis system. So if we look at between October 20 to October 21, Kinesis was able to pay out a massive 6.99% annual percentage yield on gold. That's mind-blowing. If you think, where else can you get a yield onto it in a safe haven asset? I mean, to me, this provides a higher return and it competes with every other traditional asset class, whether it's bonds or bank deposits, dividend yielding stocks. It is competing directly with that, and debt-free, and it passively has been rewarding users of the Kinesis system. And look, we got what, 70,000 users now, over 70,000 users. I mean, that are all currently benefiting from this Kinesis monetary platform. Yeah. And really, the growth side of this is enormous from here on.
I actually just checked my my own Kinesis account and had a few extra ounces were deposited as part of the silver yield. But I understand that the gold yield was actually a much higher percentage for the people who had Kinesis Gold KAU in their accounts. The yield was something like 6% or something over the past year, which was
6.99. Yep.
Yeah, kind of interesting.
Yeah, Andrew, what's next in the pipeline for Kinesis?
Well, there's a lot of forthcoming partnerships, and look, I mean, I can't look. Bit of a teaser. We're soon going to be announcing a very exciting collaborative global partnership in the debit card space. You've just alluded to it there, but I mean, this means you'll actually be able to spend precious metals as a currency at the tap of a card, and we're not talking about no limits. We're talking about a complete change in the way money moves around. And obviously, what I can talk about is the recent partnership with Atlas Vaults. And that is, you know, everyone probably saw our little, we allowed people to have a quick look into our Liechtenstein vaults. But the Kinesis expansion has now just accelerated. We've opened up our 13th vaulting location, and that is in Latin America. And obviously, you know, this in Panama. But look, this is where Kinesis excels. It brings a stable currency to this Latin American market. You know, they've got ease of deposits, redemption abilities, the power of gold and silver. Really, it's all about protecting your existing assets and avoiding the enormous erosion. And we think we have it bad in the US or the UK or Europe. I mean, you just have to move you need an inflation hedge in these regions.
Yeah, our most recent CPI in the United States was 6.2% this past week. And, you know, we all know that's fake and it's probably higher, probably closer to 10% in real life or 12%. And that's the highest print we've had in 30 years in the United States. And I can't imagine what it would be like in South America or those countries. I heard in Venezuela now they're people who do have gold, they're paying with little gold flakes in some of their products. They've returned to a gold standard in Venezuela for the people who do have it in those mining areas. But that all just sort of reinforces this point of, you know, I've got a portion of my silver in the Kinesis system now, where it's now locked up in silver on that platform. It's earning a yield, and at the same time I have access to it through my debit card. So I mean, I'm still learning the Kinesis system, but I'm really liking this because it's using that blockchain technology to track everything, but at the same time linking it to allocated silver and gold in the vault system. And I just find all of this is people who want to get into, you know, crypto and the blockchain, but still the big criticism for crypto is there's nothing tangible backing it up. And Kinesis solves that problem by having it backed up by tangible physical gold and silver assets. So
which you can redeem. Which
you can redeem and take delivery of if you want. You know, 200 ounces of silver, take delivery. So
silver's for spending. And silver is for spending, gold's for saving, silver's for spending. I think, this is such a key thing. You just talked about CPI. We're talking about negative interest rates. The US has, if you accept that number, a minus 5.3%. Moody's have just said the US interest rates are minus 5.3, Europe minus 4.6. Hey, well, is it any surprise there is safe haven demand coming into every form of commodity? Whether anything you can see, smell, touch is real. Gold and silver obviously are the primary currencies. They trade as currencies. And of course, that's why we're seeing so much demand coming into gold and silver right now.
Well, as you just mentioned, real rates, here's the 10-year bond. We're at 1.5%. 1.5% is what you'll earn buying a 10-year bond, but when you've got 6.2% inflation that they admit to, that's a negative real rates of what, 4.7%, and that's what they admit to. It's probably 5% worse than that. So we might have negative real rates closer to 10%, 9%, something like that.
The real money's chasing gold and silver.
And that's why we're seeing, this past week, gold really just took off on Wednesday after that CPI print. Just launched like $30 instantly within minutes, and silver just took out all that resistance in the 24 level and launched, to 25. It's just maybe people are waking up. I don't know. People are waking up that inflation's real. It's not transitory, and there's real problems going forward. Maybe the fear trade's kicking in a little. I don't know. Remains to be seen. I'll give you the final word, Mr. Maguire. Any final thoughts?
Well, as I say, it's thank you for having us on here. But essentially, what we're trying to do here, I think, between us all and your channel, is to kind of demystify this smoke and mirrors world, and really to draw attention to why we need real money in our lives. It's about wealth preservation. Before you make money, it's about wealth preservation, and gold and silver do that. And so having it on the blockchain, obviously through Kinesis, is a way you can do that easily. Yes, thank you. And thank you for all you guys do in getting that message out there. What a great channel you have, guys.
Oh, we appreciate it. Thank you very much. And we'll talk to you again in a few months, sir. We appreciate your time.
Great to be with you guys.